It's been roughly a month since SpaceX started trading, and so far, I would say it's going less than ideal for Elon Musk and investors. As of the time of recording, a share of SpaceX is trading at roughly $148, a decline of 26.5% from its all-time high at closing of nearly $202. And to make it even worse, despite being forcibly included in the Nasdaq after the Nasdaq changed its inclusion rules, this should not have been legal, by the way, SpaceX still apparently didn't benefit from the billions of dollars of forced buying by Nasdaq-tracked funds. Investors were assuming this forced buying would greatly benefit the stock, so I can imagine they're a little bit worried that the share price has continued to fall. Before I explain this a little bit more though, let's first do a quick recap of the historical IPO in case you don't remember. SpaceX IPO'd on June 12th at a $1.75 trillion valuation. This was by far the largest IPO ever. Now you're probably thinking, wow, an IPO valuation that is closing in on $2 trillion. Surely the company's financials were insanely strong, right? Wrong. SpaceX reported 2025 revenue of $18.7 billion and a net loss of $4.94 billion. Now, I understand that objectively, $18.7 billion in revenue is a lot of money, but not when you're trying to value your company at $1.75 trillion. This valuation gave SpaceX a revenue multiple of 93.6 before shares even began trading. For a little context, at the time of recording, Apple and Microsoft trade at a 9.2 times and 9.6 times revenue multiple respectively. So, in other words, SpaceX was extremely overvalued, and investors recognized this quickly. After a few days of the stock climbing, the share price began to crumble. In the span of just 6 days from June 16th to June 22nd, the share price fell from its intraday all-time high of $225 all the way to $154, a 31% fall that shed $620 billion in market cap. Again, another worrying sign for investors. Fast forward to July 7th, and SpaceX officially joined the Nasdaq. This came after the Nasdaq changed their inclusion rules. In the past, new publicly traded companies needed to wait at least 3 months to join the index. Well, that all changed back in May, when the Nasdaq suddenly changed their waiting period to last just 15 trading days. I'm sure the timing of this rule changing right before SpaceX's IPO is purely coincidental. Anyways, since SpaceX is now in the Nasdaq, that means that massive funds that track the index, such as Invesco QQQ, are forced to automatically buy shares of the company. It was estimated that over $4.3 billion of shares were automatically purchased as soon as SpaceX joined the index. However, these automatic buys don't seem to be having the effect that investors thought it would. Just 2 days after inclusion in the Nasdaq, SpaceX is down over 6.6%. It's probably about time that Elon started thinking about what other company of his he should merge with SpaceX in order to create more hype for the company. Let me know what you think about SpaceX and the IPO, and don't forget to subscribe to stay up to date on all things business, finance, and technology.